All right, recording's live. So yeah, let me see how many people we got in here. Yeah, so yeah, it's some information overload. It's definitely some information overload, and there's a lot of information but no direction. And one thing I've always learned, now I learned this pretty early on, that in this world, when we have like we're in the information age, but we lack a lot of mentors. We lack direction. We lack mentors. We lack people that have actually quantified that information and put it in a way where you can really use it. It's like everybody's just like, well, I'm going to stick to this information. I'm going to stick to this information, and everybody's has pieces, but nobody has the full picture. Guys, I'm not coming here to tell you guys that I have the full picture. But I will say, guys, I see the markets very clearly. And I'm going to tell you exactly the things that I learned and actually how you can learn all of those things as well, so that you can see the markets clearly as well. So believe it or not, today I'm going to actually be showing you, demonstrating, doing live examples of exactly what I do and the order in which I do the things that I do in the markets to actually become successful at trading. Just a little bit of background information about me for those that do not know me. Let me see. Should I go ahead and live cam this thing? Kind of ugly. I think I'm good. I'm wearing a do-rag all day today. Cool. So yeah, while I'm introducing myself, let me go ahead and do this camera quick. But yeah, guys, my name is Sakar Dosey, but people typically call me Tradesmart. I've been going by that name for about 3 years now because, guys, I've been really blessed to really understand the markets and always really grab a hold of what's going on. So I've always been a teacher when it comes down to trading. Even before I was really successful, like when I was just seeing a little bit of success, it was really easy for me to tell people exactly what I did to do it. Like I can, some people, they really can't tell you step by step what they did to actually, um, you know, enter a trade and trade it successfully and know where it was going to go and why it did it. Like I was able to do that very quickly. It's just a talent that I was able to grasp very quickly. So started calling myself Tradesmart. And I took it very seriously. I've definitely educated over thousands of people. And it's been 5 years since I've been trading. This year I was fortunate to be a swipe trader for a majority of the year. I actually am no longer a swipe trader. I stopped at the end of, what was that, October or beginning of November. And I was on since the beginning of this year, about like March. And I was a top swipe trader on there for about 4 or 5 months. And I mean by a long shot too. So I definitely have a unique set of skills, and today I want to show you guys. Like I'm so excited. I feel like I'm talking too much. I'm really excited to show you guys exactly what it is that I do step by step. But let me go ahead and turn this face off. Oh, real quick, for anybody that doesn't have it, guys, definitely plug in with me. Follow me on IG at tradesmart.z, especially anybody that's trying to brand themselves and whatnot too as well, and want to post trading content. I'm definitely a good person to follow. Right now, I'm very consistent, and you can definitely use what I post and repost it as well. But without further ado, we'll go ahead and get right into this, guys. First off, we're actually going to talk about, and right now, I need everybody to definitely have a pencil and paper. You're doing yourself a disservice if you don't have something to take notes with. Seriously, right now, because I'm about to give a lot of information, and I have to give it in an amount of time that's not going to overload you guys. So you need to write everything that I'm telling you guys down. First step, you gotta first tell yourself why you are actually trading, guys. Not knowing why you are trading will lead to lackadaisical trading, guys. It'll lead to seeing a trade being up in profit and being like, oh, I'm up in profit, and you walk away and go make yourself a sandwich, and then you come back and and it's hit your stop loss. Like you gotta know why, so you can be on it like a job. I know that we market Forex as if it's like it's not work, but it is a job. It's just not a job in the sense that, people typically think about jobs. Like, it's a self job. It's trading is the same as like working on yourself, guys. It's just a form of discipline. That's all trading is. Trading is just a form of disciplining yourself. The better you can discipline yourself, the better you'll be at trading. It's that simple. So the better you are at being teachable, because you got to learn from somewhere, right? Whether it's from a book, whether it's from another person, you got to be disciplined. Following those guidelines and rules, got to be disciplined. Um, on top of that, guys, your mental state when you start trading, you can write this down. You cannot trade when there's turmoil going around. If you have a death in the family, you're going through a breakup, you're going through a post argument, you just lost your job. Um, Although sometimes these things may feel like motivating factors, you're not going to see clearly. You're not going to see clearly. I can attest after 5 years of trading that life does affect trading. It does. It affects trading. If you just got cheated on, like, you're not going to see clearly. It's not going to happen. So there's just certain times when nothing that I'm about to tell you can help you, because life happens and you can't get into the markets during those times. It's just not good. It's not good for you. I mean, potentially maybe you can take signals and whatnot, but right now this isn't about signals. This is about those who actually really want to analyze the markets themselves and capitalize, or at least be proactive in learning this skill set. Another thing, yeah, like I spoke about discipline, and one thing that a lot of you guys can implement is you can go ahead. I know a lot of us are like on the positive vibes wave right now and worried about frequencies and everything, but download the Calm app. You definitely want to calm your mind and clear your mind. Y'all don't realize it, but well, some people may not realize it, but when you're doing something like trading, it's not like working at another job where when you make a mistake, it really affects somebody else at the top. Like, trading directly affects you. Like, this is a job that every single thing you do affects everything in the way that your life is going to go for the rest of your life. Whether you're going to live a life of complete abundance and financial freedom or not. And if you haven't cleared your mind, you're going to have interference. So whether you think you're actually trading well, and you think that you're seeing the charts, you really don't, and you won't even know it, because what you have is interference in the back of your subconscious bothering you, and you don't realize it. You wouldn't realize it. So you have to do some type of meditation. You have to do some type of reflection. Like, you gotta bring things up to yourself so that you can actually be the best you can be on the charts. You don't, because, for example, let's say you lose a trade. If you've ever felt a little bit more upset about losing a trade than you feel like you should have, like, that's because you have interference. You don't realize it, but you do. You think you're frustrated with trading, but you're really frustrated with yourself or something else going on in your life, and you're taking it out on trading, because trading is just is what it is. The market just is what it is. It's not a person. It's not after you. I can attest, guys, it's not after you. If you do right, it will do you right. So, Calm app, mindfulness meditation. I know this has nothing to do with strategies, guys, but the strategies don't matter. And I'm going to end this. The most important part of this webinar will be at the end. So if you get off early, you're doing yourself a disservice, because I'm saving the most important part till the end. So, like I said, I won't hold you guys too long. But question, let's go ahead and get some activity. Make sure our brains are working. Can somebody give me, and I'm gonna, it's kind of a lot, but we can just say little bits and things. What are the things that actually make up a trading strategy? So what makes a trading strategy? What are the things that are compose a trading strategy? What is a trading strategy composed of? That's what I'm trying to say. What is it composed of? And I'll go ahead and check you guys out first. Definitely, I appreciate everybody that's actually commenting something. I appreciate that. Back in college, I swear, I raised my hand. I asked questions probably every single lesson, and it helped me. It helped me a lot, engaging in, telling my ideas and exchanging. I'm seeing some good answers. Confirmations, that's one. Proper risk, that is two. So we got two things off the list already. Let's see, does anybody else have okay, I'm missing no, discipline doesn't make up a strategy. No sentiments. Market sentiment. Okay, so market sentiment. So take that and use a different word. But market sentiment would be like what? Right? So we got two things. So I'm looking for two more. We got confirmations and we have risk management. What are the other two things that make up a trading strategy? Like, think about it in order. Like, what do you need to truly know what the market's about to do and to take a trade and do all the things that are required to taking a good trade? Patterns. But what do patterns tell you? What do patterns tell you? No, trend lines, you don't even need a chart. There's people that can trade without a chart. You really just need price. All right, I see you guys. Nope, you don't even need market structure. You don't need retest. All right, cool. So I see where you guys are thinking. So I'm going to go ahead and write it out. I appreciate all you guys' answers. They were great. So in order, a trading strategy needs to tell you, number one, direction. Number two, it needs to give you confirmations. Number three, it needs to give you your entry and exit. And number four, it needs to give you your risk management and trade management. And I'll go ahead and, just in case somebody doesn't understand, I'll explain what each of these things actually means. So direction, somebody says sentiment, right? Sentiment can be seen as direction, right? We bullish or bearish. You're always looking to either buy or sell. So your strategy must tell you whether you should be buying or selling. A lot of the things that you guys gave me were confirmations on a buy or a sell, but it's not what a strategy is actually trying to tell you. So your strategy must be able to tell you, is the market bullish or is it bearish? All right. Number two, it must give you confirmation. So a lot of you guys gave confirmations like trend line confirmations, break and retest. All of those things fall in the category of patterns can even give confirmations as well, right? All of those things give you exactly what you need to know that now the direction is correct, right? Because something can tell you the direction and it not be the true direction. So next you have to have confirmations that it's the right direction, right? Or like divergence, things like that. Those are confirmations. Then entry and exit. So at the end of the day, no matter how you feel, unless you're taking partials or taking multiple exits, but per trade, you're taking one entry at the minimum and you're taking one exit at the minimum, right? So because of that, you need a strategy that gives you what the entry and exit is. If your strategy does not tell you what the entry and the exit is, then it's not a complete strategy. So it has to give the direction, it has to give the confirmations, and it has to give the entry and the exit. It has to have some type of rule on where to enter and where to exit, right? And then last but not least, actually the most important thing, believe it or not, none of these top three matter in the long term when you don't have number four, right? Believe it or not, you can make money with a strategy that only gives the directions. You can make money with a strategy that only just gives, you're just trading off of confirmations and you're not even trading it in, based off of a direction given strategy. You can make money just off of a strategy that just gives you entries. That's very possible. A lot of people half-ass smart money and they use it as just for the entries, and they don't even know where to exit, right? It's not hard to put yourself in that situation. But at the end of the day, long term, you will never see long term success. You can make 1 million, but it's going to be very hard for you to make it again or keep it without your risk management and trade management, right? The strategy needs to give you a way to know, okay, should I move my stop loss to break even? Should I move my stop loss into profit? Should I expand my stop loss? Should I move my take profit farther? Should I take partials? And then, of course, how much do I risk per trade, right? How much do I risk per trade? How much can my account be risked on at max? Are there different setups that I should have different risks, based on probabilities, etc.? For anybody, just making sure if I sound very clear and that everything I'm saying makes sense, just drop a 1 in the chat. I want to make sure that I'm not losing anybody. And remember, at the end is when we'll go over the most important part of everything. All right, great. We're running it up. So I appreciate that, guys. I appreciate that. So why I'm telling you all this, guys, I'm going to actually give, towards the end, is going to be all the actual live value. So right now, I want to tell you guys exactly where you can go. Like, I'm doing this service for anybody that's plugged in to I'm Academy. And if you're not, I'm happy that this is your best, well, not your best. I'm happy that this is your first introduction to it, or if this is your reintroduction to it. So for direction, for confirmations, well, let me not say necessarily confirmations, but yeah, directions, confirmations, entry and exit, risk management, and trade management, I actually am going to tell you exactly where you can go in I'm Academy to get these different parts of a trading strategy so that you can actually have a complete trading strategy. So that's what this is. I should actually add that. People have trading strategies, but they don't have what I should consider complete trading strategy. Right? This is from my finding, from my research on trading, what it actually takes to be consistent, to actually make a plan and hit goals. You have to have all of these things to do that consistently, right? Can you double, triple, or even 10 times an account consistently, like just on demand, right? If you want to be able to do that, these are the things that you need. So let's move this over here. So we're going to start with direction, right? So let's break down direction. What are some things in trading that gives you the direction? What are some, I guess, strategies that give you the direction? Go ahead and write some, you could do it in the chat. I'm going to send somebody privately. EMA lines. Yes, EMAs do give direction. That's one, right? Above the 50 is bullish, below the 50 bearish. Trend lines can give direction. Absolutely. Trend analysis. Smart money at a higher time frame gives the direction. That's something I was going to touch on a little bit as well. M's and W's. M's and W's are what I would call more of a confirmation than direction. M's and W's are confirmations that there's a potential reversal, but I wouldn't say that it definitely gives you the direction. Like an M doesn't necessarily say that the direction is bearish, right? The market may drop, but it doesn't mean that it's actually truly bearish, because the M may be invalid, the W may be invalid. But so I saw trend lines. Let me reflect this again, because I love to use what you guys say. Higher time frame, patterns, divergence. All right, all of those are, well, divergence doesn't give the directions, more of a confirmation. All right, so main thing. So somebody said trend lines, but I'm gonna do it like this. It will be trend analysis. Trend analysis. Right. One of the first things that you have to learn how to do is have a trend analysis. And there are several different strategies that give trend analysis, but just trend analysis in itself is a strategy that we all have to learn how to actually do. And I'm actually going to recommend to you guys, I'm going to write the name, educator that will actually teach you how to do trend analysis and how to actually use trend lines, how to actually use those, break and retests, how to actually understand the candles and what does it actually mean that the market is long-term bearish, long-term bullish. I definitely recommend Leon Davies for your trend analysis in the IML Go Live Academy. So, of course, real quick, I believe y'all still see my screen, right? I believe y'all should still see my screen. Somebody type a 1 in the chat if you can still see my screen. If you can see me scrolling on the Go Live website. All right, perfect. Thank you. I appreciate it. So let me see. I believe, no, he's under advanced. All right, great. Let's go ahead and put a face to the name for anybody that's not familiar. He's actually one of the swipe traders as well with myself. Was one of the top for a very long time. Before I got on, he was one of the top traders as well. So Leon Davies, right? He actually teaches. He teaches trend analysis, I should say, trend analysis, and you can definitely plug into his sessions for right here. Definitely plug into his sessions for your trend analysis webinars. And if anybody knows, I think, yeah, I'm stuck on 400. Yeah, culture trading room. But I believe that's the only one he's on. But yeah, that's somebody that you would definitely want to use for that simple breakdown of how to really just clean your charts and just how to use a trend line and really understand where the market's going. Literally based off of using the trend lines to actually understand your trend analysis, right? Actually looking at highs and lows and structures breaking and staying within certain areas so that you'll know where the market will go next. So that's one of the most important things in trading. All strategies depend on trend analysis at the end of the day. It's not going to be a good trade if you're not considering the trend analysis. So, for example, if you've taken a M at the top of a trend and it's been uptrending, of course, it's not going to last very long because you're going against the overall trend. The trend is important, and everything that I'm talking about, I'm going to demonstrate to you guys towards the end of this webinar. Let's go ahead and speed up through this portion where I'm giving you guys exactly who to plug into. Next, so trend analysis falls under direction. So for confirmations, I want you guys to consider that would be called price action. Price action is one of those things that gives you confirmations. Now you do have other things like divergence, but that's not something that people deeply go into strategy. So unfortunately, a lot of people teach strategies, like parts of a strategy. They don't teach complete trading strategies. Like they focus on one part of a strategy and teach it as a whole strategy. And you can find some success that way. But I'm showing you guys how to put together the full picture. And I'm going to show you guys in my trading how I actually put that full picture together. But for price action to be at the top of the list in terms of the best confirmations that you can use to take trades. Price action would be number one. Next, I would say one is divergence. If anybody has any other recommendations for the confirmations, like for example, candlestick patterns. These are confirmations. Sometimes I would say candlestick patterns and even institutional candles to me, to a certain extent now, count as candlestick patterns, in my opinion. And who you would actually go to in the IM Academy would actually be, I have two people that I recommend for this. I have Christopher Derrick and Abel Melendez. Guys, if you want some of the best price action education, these are the two people that you have to plug in with. If you are in I'm Academy and you have not plugged in with these two, anybody that has in the chat, if you plugged in with Christopher, Derek, or Abel before and you got value from their chat, go ahead and drop a 777 in the chat for me. Just show the other people that these guys are the real deal. Because I know that these guys are the real deal. I look up to both of these guys, right? I do, because they really get this broken down and they are real educators, right? They're going to get you that price action, the support and resistance, those break and retest. These are all forms of confirmations. They can be used as a strategy, but I'm just letting you guys know, to me, it's not a complete strategy. But if you want to get that piece and you don't feel like you have that piece mastered, this is where you go. So go to. Maybe I'll do it like that. All right, let's move along. I don't want to waste too much time, because once I get into the charts, we're going to be probably going for a while. Direction. So what actually gives you, well, another thing that gives direction, I said trend analysis. I just put trend analysis for the educator, but there's other things that give you the directions. Not only trend analysis, wave analysis, as well as harmonics give direction. And then any other, I'll give you this, any other strategy that is based on a market cycle gives you the trend direction, right? So not only Leon Davis teaches trend analysis, but there are other strategies that give you the direction. So write this down. The other strategies that give you the direction are wave theory or Elliott waves, harmonics, and any other strategy that I can't bring them all up to mind, but there are plenty that deal in a market cycle, meaning it's something that continues to happen again repeatedly and it's fractal. To a certain extent, smart money, but it's really smart money only when it's coupled with that other strategy, that other theory that somebody write it if you know what I'm talking about. That other theory that is based on a market cycle. So basically any cycle you got a picture and it shows you like it's doing the same thing over and over again, then it happens on a bigger scale, and then it happens on a bigger scale. That's exactly what I'm referring to. So those are the other things that you can actually study for trend analysis. Does somebody know what I'm talking about? Yes, Wyckoff. Okay, so Wyckoff, wave theory, harmonics. These things are direction heavy, right? They're direction heavy. They're always giving you direction. Like at all times, you're getting the direction. At all times. Like every I don't know if you guys realize, but at every harmonic completion, technically that's another harmonic that's about to go in the opposite direction. It continues, it's nonstop. It keeps rolling. Same for wave theory, of course, it doesn't end, right? For break and retest, that ends. Once it ends, that is what it is, and you got to wait for something else to happen. It's not the same for strategies that are based on like a theory or a cycle. It's every part of the cycle is giving you the direction until it gives you a new direction. All right, so now we're at entry and exit. So entry and exit. I can't lie, guys. I think we all know what the best entry and exit is looking like right now. There are other ways. I would say that price action is good for entries and exits as well, even though I have it down for confirmations. It's also good for entries and exits as well, in my opinion, but it's really smart money. So number 3 would have to be smart money, which we have a plethora of educators right now that are giving you this. So for example, if you are good at trend analysis and you're good at price action or anything that gives you like good confirmations, then if you've implemented smart money into your entries and exits, you're making money. You're somebody that's definitely made $500 in a day before. You're definitely somebody that's made $1,000 in a week before. I know this. It has to be true. It's really hard not to. It's really hard not to once you actually understand these things and you can actually find the direction. You know that you have the confirmations and you know that the trade is actually taking place and that the direction is true. And then you got the smart money entry, which means you basically got no drawdown entry. So I mean, most people don't even calculate risk. So if you're not calculating risk, you're probably easily doubling, accounts off of these trades because most people don't properly risk. But smart money, and we have recommendation for you guys. Rock Kramer and Zach / Jordan. Definitely spelled. Yeah, Zach and Jordan. So these are the two people that I recommend, or two groups that I recommend that you plug into to learn smart money. If you want great entries and great exits, fall into this, and I will demonstrate all of these to you guys. I'm going to sit there and I'm going to demonstrate all of this to you guys as a live example, and then I need you guys to plug in with these educators as well to leverage them. And also, by the way, for smart money, if you go to Rock Kramer, write this down. If you go to his favorites, so let's go ahead and just find his real quick. If you go to his favorites, he already has the best videos for you to watch that breaks down exactly how to do it. Like, he's actually selected the ones that you really need to watch, and he really has it already breaking down. So you got divergence setups, entry setup, right? Teaching you how to get the entries, how to know which candle to choose, right? So how to know which candle is a good entry. And also remember that these candles for entries are also candles for exits. So right now there's nothing better, in my opinion, for pinpoint entries and exits. Nothing better. There's really no competition. So, right, exactly. So Rock Kramer and Zach and Jordan, smart money. So that's going under the entry and exit portion. And then last but not least, risk management. Abel does go over risk management, so I'll just drop that as well. I'm not sure if anybody knows. Go ahead and share it in the chat with everybody if there's any educators that focus on risk management. I'm going to go over it a bit to you guys and make sure that everybody has our Trading Made Simple Excel, and I'm going to go over risk management at the end of this as well and talk about that. But risk management is just the most important thing. So you want to be solid on it. You want to know exactly what your goals are and how you can achieve it with risk management. And you got to, and then believe in it, and then have a strategy that can actually make that come true. So yeah, number 4. Yeah, risk management. We're saying risk management. You're gonna definitely look at Abel. Myself, I have videos on risk management. Abel, Tradesmart. Definitely come to me. I'll be making more videos on risk management as well. So these are the 4 things, guys. This is who I recommend that you go to, especially for the actual strategies. Number 1, trend analysis, or if you have access to a wave theory, wave books, harmonics, or using a harmonic scanner, that can help most of this. So honestly, this is something that I do, and this is what we're going to go over as well in this webinar, is if I'm on the harmonic scanner, I use the harmonic scanner for the direction, but then I use other strategies for my confirmations. I use other strategies for my entries and exits sometimes. And I use, of course, risk management. Like, I employ all of these things. There's never a moment when I'm not employing everything, so that I'm giving myself the highest possibility for success. So let's actually go ahead and look at some trade examples. And now I'm going to get into exactly the way I trade. Some things you may not understand right off the bat, but I am going to reference. So if you haven't written this down, it's going to be hard for you to follow along. I'm going to reference a lot of what we just talked about as I go through with it, so that you can actually build like a visual idea of what's actually going on. So first off, we're going to definitely go ahead and look at Euro Great Britain pound. This is actually a trade that I took with my team. What was it? It started like a week ago. So let's go ahead and clear the chart. Remove all drawing tools. All right, perfect. So let's go on the monthly. Always got to start on the monthly, right? Always got to start from the monthly. That's number one, guys. If you're hopping on your charts and you're hopping straight to the 1 hour, it's going to be hard for you. You got to start. The higher time frame is where all the keys are. I mean, really, you can hop on if you catch the right time on the monthly, trading can be very easy for you guys. It can be very easy if you know what to look for and wait for on the monthly. But let's go ahead and actually analyze what's been going on in the charts for your Great Britain pound on the monthly, right? So let me go ahead and get my handy dandy drawing tool. Nobody uses this more than me. So if we look to the left, for the longest, we basically made a low. And on the monthly, we basically made a high. We pulled back, made a higher low, right? We did a correction. And then the market made a very large move up. Then they made a deep pullback, deep correction. That's what this is. If you don't know what correction is, definitely add that to your terminologies and look into it. Deep correction. And after this deep correction, they then made a strong push. A strong push. This is a strong push that is breaking structure. So for example, what do you mean by structure? There were two highs here. Market broke above that, and then it pulled back, and then it actually made a higher high past that structure as well as the next structure too, right? And then now they've gone into, if you're looking at on the monthly, they've basically been in the same zone, right? So I don't know, let's say this was like a price trap setup for those that trade that way, right? So you may be looking at something like this, and you would be it would be simple. So it's just a quick preview to Christopher Derrick. Essentially, you would trade this any direction it goes once it breaks out. So for example, if it does this, once it breaks out and retests, you're buying. If it comes down, retests, you're selling. Easiest stuff ever. Easy. I mean, it doesn't get any easier than that, right? It doesn't get any easier. But outside of that, and I just wanted, like I said, I want to build on to what I've spoken to you guys about. That's a part of price action, and that's how you would do it. But essentially, another way of trading it is within this structure. So basically, what we have is we have rejection here, here, and here, right? And we have rejection here, here, and here. Meaning, if the market comes into this zone and it rejects, you can actually anticipate that it'll at least come to the middle or come all the way to the top, or even go and break out. Meaning that coming to this zone and not breaking out of it is actually a setup to go in the opposite direction. So we're starting off from the monthly. This is how my mind is thinking, looking at this trade. That's how my mind is thinking. So that's first off. Now, did I actually take this buy? Nope. I never got a chance to actually enter this buy. But because I knew that this would be a decent move from the low and that it would buy up, once I missed the buy, I was fine with that. My next option is to figure out, okay, where will the buy stop? So we started on the monthly, but the monthly, that's pretty far. I need the trade to hit soon. So I drop down to the weekly. I look and see, okay, is there any candles where there would necessarily be an exit if I were in a buy? So let's say I was in a buy. Where would I exit this trade? The first thing I'm looking for that's easy to identify, taught from Smart Money, is that this yellow candle here that got engulfed is actually a candle of interest that I would be looking for a market to actually be drawn to. So like simple, easy, let's say you did buy from down here, your TP would have got smacked, boom, just like that. So it's just where the areas where the market are drawn to. So that would have been the first area that I'm looking for. So if I pulled up my old charts, this is how the first area looked. So after that, I don't assume off of that. I always go down to a lower time frame and see what I can find. And I see a few different candles here. So at one point, I was looking at this last yellow candle that got engulfed it. I'll just highlight it, but basically it had never got retested. And you can actually see that when the market came to that candle, which was here, it actually rejected pretty nicely. It's a nice little rejection from that candle. So this is actually a solid trade, just not long term. Is that really 50? Yeah, that's like 65 pips. That's actually pretty nice because your stop loss would have only been, let's say you pull from the 50%, your stop loss would have been right above the high. And yeah, let's just say you didn't get the best exit. Yeah, that's at least a 1-to-2 risk to reward ratio trade. Just simply meaning if you're risking $10, you're aiming for 20. If you're risking 100, you're aiming for 200. But yeah, so the market actually, it made it to the top. It actually made it to the zone. And I'm going to start right now applying everything that I have just mentioned to you guys. So number one, strategy giving directions. Rule number one, I trade wave theory. Wave theory is pretty simple on the outside looking in. On the end, once you get in, you realize it's not simple. But on the outside looking in, it simply states this. It simply states 1, 2, 3, 4, 5, and then you go into a 3-wave correction. 1, 2, 3, right? And then this could get more complicated to another 3, and basically all of this will end up being 1, 2, 3. That's literally the gist of the most basic foundation of the way that I trade. And the way that I trade for the most part is always giving the direction, meaning that after I get 1, 2, 3, 4, 5, once I get 5 waves of a true impulse, that I should be now expecting a bearish corrective move, right? Basically a move that just moves like this. In some form or fashion, it's going to move like that. It's not really going to be in a hurry the way that like this wave here actually moved, right? And as we can see, it was not in a hurry. Like this was like 2-3 days of doing nothing, right? And all this happened in like one day. So it's not in a hurry. Everything's looking great. We already, remember from the higher time frame, from the weekly, we reached our area. So wave theory is telling me that once we reach this area and that we have 1, 2, 3, 4, 5, this area is an exit for a buy, but it's actually an entry for a sell. So I have an entry zone, number one. So I found an entry zone. Maybe I should type some of this stuff out. Not with that. Just some things to, why am I clicking the wrong thing? Just some things to add to you guys' eyes. I found an entry zone, but I have not necessarily decided to take the trade just yet. Let's put 1. Well, I have an entry zone, but I don't necessarily have the direction just yet because at first the market was moving up, right? It was moving up, but we did get to an exit area. This is also an entry. Remember, all entries are exits, all exits are entries. It's the same thing. It just depends on what time you got in the trade or not. So we got to this entry zone and we made 5 waves up. It's simply put that once we make 5 waves, I'm just looking for it to break the bottom of the 4th wave. The 4th wave would be the correction that happened before the last move. So this entire structure here was a correction. And literally the market is drawn to taking out that area. So as you can see, they literally spiked just below it and then started to pull back. That's just how the market works. This same thing comes in, you can find it in kind of Wyckoff. In Smart Money, they teach it a lot as well, that, below these even lows, they'll do it. It's just another interpretation of it. But so far, I have an entry zone. Once the market made this 5th wave up, I do have a direction. So I'm just showing you the things that can come together for a great trade. I do have the direction. guess I'm not putting these things in order, but that's just the way that they came. I do have the direction, which is bearish. Another thing that I actually have is a confirmation. So for all those that use divergence, just real quick, I'll pull up the RSI. Everybody should at least know what the RSI is, even if you don't use it. I use the TDI, but I'll pull up the RSI real quick. So real quick lesson in divergence for anybody that hasn't plugged in and learned it yet. It's this simple. Write it down. Divergence is when the indicator does the opposite of price. That's it. Negative correlation. You can write that down as well. Negative correlation just means doing the opposite. So I'll quickly just show it doing.
Could you say that again? Excuse me for interrupting.
No
but
problem.
Could you say that again?
Divergence is when the indicator does the opposite of price. Opposite. And when we're saying opposite, we're really talking about making highs and lows, meaning if the indicator made a higher high, then the price needs to make a lower low for there to be divergence. And that would be called negative correlation. So now there are other types of divergence where you're doing price versus price. Like two different currency pairs can have divergence. But we're not even getting to that on this webinar. We'll be on here all night. But for right now, we're focused on the divergence from indicators. So as you guys can see, that here is the same point from here on the price. So all the RSI is just an average of what Euro, Great Britain, pound is doing. And based on this average, something is changing. Where Euro, Great Britain, pound made a higher high, but on the indicator, it made a lower high. These are some of the same confirmations that we teach people to use on the harmonic scanner. Very good to use. You master this, your harmonic scanner percentage is going to go up. So that's confirmation right there. Divergence, that's one of my confirmations. Another thing that on the indicator, there is both, if you notice, guys, they're both touching the 70 line. The 70 line is essentially, like you see how it's highlighted, they came out of that highlighted zone. That basically is saying, it's not really saying this, but you can call it this, is that it's overbought. There's no such thing as overbought, but that's just a terminology that we use to make it make sense. But it's technically overbought. So above the 70 is a great area to see divergence because you know that soon a sell is coming, especially when we're talking higher time frame, 4-hour daily, 2-hour and above for sure. So let's go ahead and write that down. I actually do have confirmation. And then last but not least, which I don't have to write, but I will demonstrate it for you guys, is I need risk management. So let's close that. So I need risk management. So how would I actually manage this trade? So this is exactly what I did. It was 7-6, something like that. That was like the entry. I think the stop loss was, oh no, my entry was higher than that. Yeah, stop loss is above, definitely above this high here. So I'll just flip it for the top. Above this high. I actually noticed this candle. So if you're following smart money and if you don't know what I'm showing you right now, basically, if you look very closely, exactly where this bullish yellow candle, let's open up this chart some. Exactly where this bullish yellow candle opened is exactly where the wick of price actually touched, right? It's extremely perfect. If you want to learn how to spot this every day, tune into Rock Kermer and Zach and Jordan. And also you can tune into Jiggy and his sessions. So definitely do his sessions. You can write this down as well. Zoe actually did a training on Abel Melendez's channel on December 24th. And you can plug in to his training on smart money concepts. Yeah, from December 24th, and he does a great job at breaking down the basics as well. But this just made everything a little too easy. But yeah, this is the candle, which simply means my stop loss is above this point. Like I already explained to you guys earlier, is that I also have an exit. I know that my exit is below. Where's my other tool? Oh, here it is. My exit is below these two lows. Right? My exit is below these two lows. So simply, and I don't play games. I really set my TP like right below, because the market can take some of these rules to the extreme where they'll literally wick a pip below that low and turn. That happens a lot. So I take it pretty seriously. I don't be greedy. So this trade, and I don't know if anybody doesn't know this, but hopefully you learn it today. If you don't, when you're using the bearish and bullish or buy and sell tool, it actually tells you the risk to reward. You don't even have to calculate it. This says 4.42. That means the risk to reward is 1 to 4.42. So basically it's 1 to 4.5, meaning you're risking $1 for $4.50. You're risking $100 for $450 nearly. Yeah, exactly. Yeah. You're risking that for about $450 because your Great Britain pound actually pays more per pip. It's the most highest paying currency pair. I don't know if you ever noticed that you lost a lot more money with your Great Britain pound. It's because it actually pays a lot more per pip than any other pair. But yeah, the risk to reward on this is 1 to 4.42. So you always got to put the 1 yourself. It's never going to put the 1. So basically it's telling you the reward, and you know that the risk is always based on a factor of 1. So how can we actually use this to make sense and make money? So follow me, guys, and we're going to pull up 2 different things real quick. I'm going to go ahead and add that position size calculator. And we're going to go to this trade and made simple. So let's imagine that your strategy or your risk plan is based on $1,000 account. I probably should make this 100 just to deal with the general mass, but I mean, everybody's goal should be to get a 4-figure plus account, because that's probably what you need to really take care of things. So we're going to do it based off of where we should be or above. So imagine you have a $1,000 account. Even if you got a $5,000 account today, you got to imagine you got 1,001. And you set that in your goals that you will risk. I'm going to tell you guys what I recommend. If you're very, very, very new, you probably need to risk 3%, no more than 5%. If you're experienced, 2 years plus, then you could probably go for the 10. After that, you should only have 2 trades running at 10% risk apiece, which means no more than 20% risk at one time while you're trading. But we're going to just go ahead and put 5%, because I don't want to show you guys an aggressive way of trading. So on average, we're saying that each trade that we're looking for in this trading strategy, we're looking for setups that have a risk factor of 1 to 4. That's what 5% to 20% risk return means. It just means that it's 1 to 4. 5 goes into 24 times. So we're looking at a 1 to 4 risk reward. So we already know that our trade kind of fits that criteria. It's a little bit above it. So it's perfect. So we're risking essentially $50 to make $200 in this trade. But now, one thing that you have to figure out to actually get these exact amounts is you actually have to calculate your exact lot size. You have to know what the lot size to place on this particular trade, because none of this is telling you the pips. It's not telling you the pips for the risk. It's not telling you the pips for the reward. So you have to go and get a third-party calculator, whether it be this or StinU, which is an app. That's STINU. Somebody write that in the chat. Or anybody wants to recommend any other position size calculators, go ahead, fire off in the chat. So you would put your account balance. Your 5% risk ratio is always based off the risk. Every single one of your trades, guys, should be based off of how much you're going to lose. Every single trade must be based off of how much you're going to lose. Why is this? You need to see what amount you are losing before you enter the trade, and you must accept it. When you place a lot size and you don't know what you're going to lose, and you just place the stop loss and you're taking a signal and you don't know, you're making this a joke. You're making this a random game. Every single trade, you must already know and predetermine at least about how much you're losing. This will change everything and completely make this will make trading so much more real. How much you can make will become more real, and how much you can lose will become more real. And you'll begin to actually become more disciplined and sounding trade. As soon as I started implementing this with a lot of the traders that I work with, they stopped blowing accounts because things became real. It didn't become random acts of nature happening to their account. It was them happening to their account because you're choosing every single trade. You're deciding. And this is the most important thing. This has to be the most important thing. So the stop loss on the trade was 25 pips, if I'm not mistaken. 25 pips. So, and then I would select a pair. So I have $1,000 account balance. I have my risk ratio up to 5%. I have the stop loss at 25. I have Euro, Great Britain, pound. And guess what? It gave me the same thing that my Trading Made Simple chart gave me, right? My risk is $50. It's not going to calculate the reward for you because it's really not about that. The reward needs to be whatever the reward be. You need to manage your losses. The losses is what's hard to manage. Because the thing is, if we could, we would let a win run forever. But what we should never do is let a loss run forever, right? If you catch gold and for one day it happens to drop to $5, we buying that thing with a stop loss below 0 and we holding forever, right? But if it's the opposite and you selling gold at $30,000 and it's dropping, I mean, you're not going to hold that forever. If you're trying to buy it at 30,000 and it starts dropping on you, you don't hold that forever, right? You want to manage that loss. So what did this give me? This gave me my lot size. It told me that if I have $1,000 account, that I need to do a 0.15 lot size. And simply, I would enter 0.15 lot size with the criteria of the stop loss and my take profit. And at the end of the day, if you want to calculate how much you're going to you would win on this trade, you would simply multiply $50, which is your risk, times the factor on this tool. If you know how to calculate it based off the pips, then that's perfect. You can do that. But I like doing stuff even easier sometimes because I need extra time in my day. So you would multiply $50 times 4 point, I'm just going to put 4.5, right? And that should equal, somebody wants to do that math real quick? How much are we risking and how much are we, well, we know how much we're risking. How much are we making off of this trade? $225. Thanks, Nate. I appreciate you. $225. This is a great way to trade. I don't know if anybody is listening, but I would love every day to risk $50 for a return of $225 on each trade. If every setup that I take, do y'all know that if you took setups like this every single day, and if your win rate was only 50% win rate, you would still be profitable even if you lost half of your trades. And I'm going to tell you guys a fun fact. When I took $100 to nearly 20 grand, my win rate was around 50%. When I flipped like 4 figures to like 20 grand a second time, my win ratio was only about 50%. Anytime I've made a large sum of money in the trade, well, large is relative. Anytime I made a large sum of money for me in the market, my win ratio wasn't that great. It wasn't. Y'all know why? Something I noticed. Anytime I had a really great win ratio, like something like 80, 90%, I had ego, which led to me over-risking and losing that account. Those accounts that lived, they took a lot of losses because I was actually managing my risk and I was managing my trades. I cut losses short and I held wins. The money was growing, the losses were coming, but they were small. They were small. You can be profitable and only be 50% at winning, guys. I mean, you can literally achieve whatever goal you want to achieve and still only win 50% of your trades. But you have to take good setups with good risk to reward. You can't just take good risk to reward bad setups. That's what a lot of people are doing right now. They're taking bad setups with great risk to reward, right? They got these 1 to 7 risk to reward trades and they're smacking stop losses back and forth. Or people are doing the opposite, right? They're taking horrible risk to reward setups and they're winning, but the problem is the risk reward isn't worth it. So they're not actually profitable enough. Does that make any sense? So if you're taking 1-to-1 trades, or I've seen some people do some crazy bot strategies where it's like the opposite. It's like 1 to 5. It's like 5 to 1, meaning you're risking like $50 to make 10. So you got the stop loss super far, and you're like, well, it has to hit the TP before it hits that stop loss. And guess what? Nah, it don't work like that. Because the setup, you're not getting good entries. You don't have the direction, and you don't have confirmations. You're just trying to let some type of weird probability, win the game for you. And it doesn't work like that. This is how it works. This is what works. And if you follow this with discipline, you at the least, you will not lose all your money, which is a great thing. Because guess what? You would keep a lot more people in this business for those that are in I'm Academy if at the end of the month, they didn't lose their $200 account. If they just had $205, they would probably say, you know what? I see what I could have done better to make this money. As opposed to, I just lost everything. What do? I can't pay my membership. You told me that I can make the money to pay my membership, and it's over. So that's one setup. What time? Where are we at on time? We're running over. All right, we're gonna end at 11:30. So new setup. New setup. We're gonna go look at gold because gold's going dummy right now. So let's take a look at gold. So, okay, we'll do this the right way. Dang, y'all gonna make me remove everything off of gold. Do I have a second gold? Nope. Let's just get rid of it. Boom. It's all gone. So let's take a look at gold. I mean, it's pretty obvious what gold is doing. It's been going up for a long time, right? It's been pretty bullish. This was a pullback, but not a sell, right? It's a pullback, not a sell yet. We had this structure here. We broke. We slightly retested it, and then we kept going up. So as of right now, the trend analysis on gold is clearly long-term bullish, right? Long-term bullish. So for anybody that's been a while since you looked on the monthly for gold, it's long-term bullish. It's yet to have. Let's go back on the monthly so I can make it clear. Do y'all see this? The last bullish candle, right? This large yellow bullish monthly candle. Did that candle get broken or violated? Nah, it hasn't. So as long as it doesn't, and at any time you see the market building up multiple candles and there's a large candle preceding it, they're going to break the high of that candle again. It's just that simple. It's going to happen, right? So weekly, let's see, what do we have? Of course, we know that on the monthly we're not getting anywhere. But let's look. Do we have any highs to the left that while the market was going up that it could reject from? Indeed, we actually do. If I actually mark here at this high point that was made before they pulled back and broke, this was actually a break without a retest, meaning that the market could come back to this point and use it as support. This is very basic fundamental trading. Look how much money it could have made you just to simply be on the higher time frame. And I was in at this trade at the bottom. I took profit like a dummy. Should have probably held that. But I took this from the bottom. But Of course, for those that trade waves or even harmonics, there's definitely a bullish harmonic in this structure, as well as a wave pattern, right? So the wave pattern is simply this. It's just a large correction. So if you want to throw that, some people will probably kind of call it a wedge, not really a wedge. It's a flat pattern. So I already have the direction. We can just mark that off the charts already. We know that gold is bullish long term. We knew that. That was not hard to tell. So number one, setup. We have the direction. One, direction, bullish. We already know this. This is kind of easy, right? Next thing that we're looking for, we're trying to find, we want some confirmations and we want some entries. So I'm going to show you guys a very strong confirmation for a setup like this. And this is something that you need to definitely learn. And you'll learn this also in your trend analysis with Leon Davies. So once the market reaches a major higher time frame point of interest, so this candle, right, from this area here, once the market reaches a major area like that, you are not forced to enter this trade. And just because it leaves this area does not mean that that trade is over. What you have to pay attention to is how the market breaks the structures and also the highs and the lows and the sequences of how it's making highs and lows. So at this point, I need to go off the daily, and I'm only going to be able to show you guys this on the 4 hour. And I want you guys to pay close attention because this is one of those things that gives me strong direction. So we already know it's bullish, but now we need to find where to really enter to have actually caught this trade. How could you have caught this trade? There is a way. It's a way. So, and it brings together everything that we've talked about. So one of the things that starts a trend, almost every trend move that moves really big like this, they start off really clunky. So if you notice that gold was basically in this area for a while, it wasn't really going far. But one thing that it was doing, can anybody tell me, and does anybody notice what it was doing slowly but surely each time that it made a move? Can somebody tell me what it was avoiding and what it was actually doing? Higher highs, higher lows. Yep, it's so clear, so easy, right? It continued to make higher highs and higher lows. So let's start from the beginning. Higher high, breaking above this high and this high, right? So that was the first structure. So they started off with an inverted head and shoulders. That was the beginning. And from that, they made a higher high again. But then they pulled back pretty deep. I almost even considered that maybe they could spike this low again, but they didn't. But now, this is where it gets really good. From this move, they go and make a new high. At this point, if they fail to make a new low, it is easily long-term. Is easily long-term bullish from this point. So why is that? When they actually made this move here to the high, they failed to actually touch this structure here for a retest. They didn't make it there. So just making it clear for you guys. They didn't make it here. They actually didn't touch it. They missed it. Like they almost purposely missed it. They didn't touch it. So they didn't get the retest, which means that it was a chance that once they hit that area here, that they could actually get the liquidity from that area and use it to take the market back down past the low. And this would just have been considered a correction. But what they did is instead, they did reject. There was money there. And they even used news. I think this was NFP. But where did they come? And this is why you need to plug in to your smart money concepts trading with Rock Kermer. And if you have the bounce back, the sniper strategy, this was called by one of my close friends, Iffy, on bounce back, and it hit all TP3s for like 300 pips. This candle here was your area of interest for a major buy. And this is where they have their entries for. And what's beautiful about this trade is that if you simply just draw your trend line going across, you see that the market is respecting above the trend line and is coming within a low point within a candle of interest. All right, it's coming within a low point of a candle interest. But even if you don't catch this entry, there's still another chance. Even if you don't catch this entry. Then on top of this, there is another confirmation of divergence. So the divergence is from all the way, it starts all the way from here to there. So opposite, right? So what happened is that from here, there was a lower point, and from there, it's a higher point. But on the indicator, we went lower when we came down to this zone. So that's one of your confirmations. So we have confirmation, we have direction, and we have an entry because we have an entry candle. So I'll go ahead and write all of that. Well, it's way up there, but I can probably go down to this time frame and write it all out. So number one, keep doing that. Number one, direction. 2, confirmation. No, we have not got confirmation. Well, confirmation would be something else. Trend line is confirmation when it like this. When you have a trend line like this, that is confirmation. But we're doing to do something different for confirmation. Trend line, we have direction. We have entry and exit. Oh no, we just have entry. And yeah, and we're gonna get a different confirmation. So I'm going to show you guys, when you have this type of analysis on the higher time frame, you have so many opportunities to still get in the trade and win massively. So let's say you didn't catch this, you didn't catch that, you didn't catch that. That's fine. But what happened after this? The market spiked up, made a newer high, and then it spiked down again. This is crazy. I missed this trade, the sell down, unfortunately. But yeah, it spiked down really hard. But what did it do? If I zoom in closely, this would actually probably upset somebody. So all it did was come into another candle of interest, right? That's all it did. So this last little bearish blue candle here, and it came up and engulfed, and they respected it here, but they just came back into that same area, same zone, and then rejected really nicely. So you got another entry point. You could also use this candle as well, but my stop loss probably would have been there, so I probably would have got hit. I'm not the type to put it super low, but this candle still sufficed. So another entry. And also what we're looking at now is, okay, we pull this trend line from here to here to here, and what are we getting? Very simple. It's amazing what a trend line can do. How many setups a trend line can give you? Like good major setups. It's really not that hard to pull out a trend line. So that's 1 touch, 2 touch, 3rd touch, and it still rejects. Crazy, right? And of course, if we're going with the trend and we continue to make higher highs, higher lows, higher highs, higher lows, by default, the market is going to make a higher high, and you can just calculate the pips. And if it's not going to make a lower low, then you know that your stop loss is small. It's only this area. And all of this is your potential to the upside. So as long as this was moving up, I knew that there was always going to be a lot of potential to the upside. The only part is, okay, crap, I missed all of these entries. How do I find an entry? So what happened? The market pushed up, and it gave some decent stuff, but it really didn't give anything nice until it gave this bullish candle here. And this bullish candle is significant because the candle that it engulfed is actually the setup that it played off of. So this bullish candle broke above this candle and really pushed structure up. And the market went into a corrective phase. So basically we just I'll just do it in a confirmation. We'll just do like a confirmation. So we'll just do it like this. Let's do some bounce back for you guys. And then We'll do this down here, right? All right, perfect. Yeah, let's bounce back and gold cup for you, or gold rush for you, all in one. But this candle here got engulfed. The last blue candle, the last bearish candle on this chart, it got engulfed, but the body never got retested. So we highlight that, and if our direction that we anticipate the market to go in lines up with this candle, then this is a candle that you would actually set a pending for. But let's say you didn't set the pending for this candle. Let's say you didn't set the pending and you still missed this, right? So even though it gave you the bounce back setup, it's kind of spiked outside of the zone, but it didn't break and retest. Remember, bounce back teaches you that this must break. Some candles need to close. It needs to retest, and then you take the sell. That's absolutely not what happened. This was absolutely a liquidity spike just to get to this candle, to get the orders below all of these lows here, right? Because people were buying, or orders are below these areas. They spike to get those orders, and then they turn the trend. And they were gone after they did, what move was that? I think it was, yeah, this move. Because this is when I called the buy. I called the buy in this candle. Because this was just, after they do this, they push up, and they gave this engulfing here on the 4 hour. This is when you can enter the trade. Stop loss below here is pretty safe. This is when I called the buy. When we took profit above the high, and then they came back to our break even. But then you see what happened. And the reason why they came back to the break even is because of that, the same concept. This candle here, area of interest. If you're seeing blue candle comes into it. So these what we call institutional candles, or candles of interest, they are definitely candles that you want to watch, especially in the direction of the trend analysis, or the direction of your strategy. So last but not least, what's the last opportunity on this trade? So we just saw so many opportunities, but it still hasn't necessarily taken off yet. The market then breaks above this structure, breaks above, candle closes, and then it retests, pulls back. So you have breakout, engulfing candle. You have a pullback that touches, pulls back. As soon as this any candle, I've noticed any candle after a situation like this, and they print any type of candle that's going in the opposite direction, in the continued direction, I follow that candle. And you would have got a 0 drawdown entry if you actually entered at the open of this candle. That's like 1 pip. So yeah, you enter this and you then catch everything. Now I missed this. Like I said, I took the buy from here. I actually did not catch this entire buy. I caught pieces of it going up afterwards. But I caught the buy from here. Took partials, but my stop loss break even got hit. I should have left it below the low, but I would have caught it off. But this setup, it played out so well, but the beautiful part about it is that it was giving you the direction multiple times. It gave you entries multiple times. And then last but not least, because none of these gave the confirmation that it was long-term, but this breakout and retest, last but not least, was your confirmation. And these are the 3 things that you really need to be looking for when you're trying to actually trade the markets at a high level. You have to have something that gives you confirmation. These are just some of the things that you can use. There's so many different strategies out there, guys, and none of them are wrong. They all just describe the same thing in a different way, just like different languages. But you have to have them if you want to trade at a high level to be able to catch these moves. This setup here, guys, is incredible risk to reward. Because in reality, we talked about exits, right? In reality, if you're looking at the daily, your first exit wasn't until it got here. That was your first exit. That was my exit when I caught a buy somewhere in between this. This was my exit. And you see how it rejected slightly for a day just to correct when it got there. So there was money there, but it wasn't of course, the long-term exit. But that's what your risk to reward would have been. It would have been something crazy, like 1 to 20 or something, 1 to 22. What was it? Like there, stop loss below the low. Oh, well, that stop loss is a little bit larger. So this one is saying 1 to 6. But if you got the entry like that I had, where it was a lot tighter, then it goes a little crazy. We're looking like 1 to 16. Because, yeah, my stop loss wasn't nothing but like 25 to 30 pips. Yeah. But that's the point of the matter, guys, is that these are different types of trades. So if anybody has any questions, we can go as long as you guys want to go for those that's really hungry. I definitely want to answer questions because I know it's a lot of information to take in at once. I want to get deeper into a lot of things, but time is one of those things that limits us. But I'm going to go ahead and take some questions and give the best advice that I can for you guys. Like, I don't want to, it's always talk about give some value and then take it away. Like, this is not one of those webinars. Like, I want everybody on this webinar to really take this, understand to a point where you can be able to teach it to somebody else. Extremely helpful. Can I use this on every pair, every stock, every commodity, US 30, it doesn't matter. All these rules apply 100% to everything. They do not fail. Trade this with complete confidence on anything. Literally anything. I found success with this on stocks, everything. It doesn't make a difference. But you have to implement them all. One without the other does not work. It doesn't work at a high level, I should say. So with that, if I don't have any other questions, guys, we're definitely going to go ahead and conclude it. Let me see if I have any closing thoughts for you guys. I see something. Drop the link to the Excel for the risk management. Can I drop that in here? I think I can probably create a link of this file. If I press share, can I create a link? So simple. With this link, no. Anyone with a link can kind of, anyone can view. Yeah, we could do that. So what you're going to do, I'm dropping the link to the Trading Made Simple in the chat. What you're doing, guys, is you're going to go to File and just press Make a Copy. And then it's going to open up a new copy, and it's going to make you save it. And from there, then you can edit your own and do your own thing with it. Of course, this comes with more than just that. It comes with your trading constitution, right? All your rules and just the way you think about trading. Like, I trade for pips through risk management, not for money. Of course, your confirmations and your ideal setups, right? So this is where you actually put your strategy. Identifying ideal setups. Example, bullish or bearish trend. What is it telling you? It's telling you everything I told you. You got to have trend analysis. Price, support or resistance, right? You got to have confirmations. Liquidity, right? More confirmations or even entries. Liquidity grab, entries, imbalance. So this is seems to be for somebody that maybe is looking for doing smart money concepts. Other confirmations, right? Engulfing, Armani scanner signals, double top, double bottom, trend confluence, candlestick patterns, Fibonacci, support and resistance. I didn't even get on Fibonacci. Guys, I do a lot of Fibonacci in my trading. Every day, I pull out the fibs. All of this, you take what I put that on there, right? Put that on there, making sure you're doing those things. Of course, your trading journal, right? This is actually a journal this is just one day, and I didn't finish it, but this is, I completely doubled an account within 24 hours. I made like 10 grand on an account, and yeah, in 24 hours. And this was actually the trades that were taken to do it too. The risk was high though. The risk was on average like 20% per trade. But once you do the math, you'll see that that's pretty easy to double an account at 20% per trade. So I can leave it at 1,000. So, yeah, 20% per trade. I mean, if you're doing it good, it just takes 4 trades to double it. If you're getting a return of 20%, you don't have to necessarily risk 20%. So if I'm risking 20%, let's say if I'm doing more than 1-to-1, so let's say 20, and I'm on average catching 30 to 40%. I mean, the account's probably going to be doubled pretty soon. Yeah, it doubles in not even in two trades. I wouldn't recommend this, but that's just showing you guys what's possible. But you gotta have super discipline to wait for exactly what it takes to do that. Yeah, with that, guys, I appreciate everybody that got on this webinar. I'm gonna check for any of the questions. That link is amazing. How can we follow you? You've been very helpful. Yeah, follow me at Tradesmart. Right now it's just IG. I can get my YouTube together, but tradesmart.z. I'll be doing a lot more public stuff on there as well. Definitely take some pictures of the screen, post on social media. On Divergence, what is more important, the RSI or the actual chart to determine the future move? Divergence is just a confirmation. It doesn't determine the future move. You're using divergence to confirm your trend analysis. Okay? It's not the trend analysis. You can't say, oh, divergence, the trend is bearish. What you're saying is, oh, it's divergence. The trend analysis that I have is higher lows is actually proving that this is this is actually going to be a lower high. So I'm not sure this one has divergence, but I know if I go to the right time frame, it'll show it for an example. So yeah, 4 hours, this would be easy. So check this out. Gold definitely gives divergence at this high pullback compared to the high previous high. Yeah, easy one. It's an easy clap, easy example. So I am doing a trend analysis, and I'm saying that gold is short-term bearish. And I have this trend line here. And the market, it moved here, it respected here for the second time, but it broke above this point. It broke above the trend line. But because it broke above the trend line, does that mean that it's not going to continue down? No, it doesn't mean that. What it means is that I need to look closer. So what I need to pay attention to is, does it break the trend? Does it actually break the previous highs? And what happens is, no, it doesn't. It doesn't break it. And then it comes up again here and it makes an even lower high. So we have 1, 2, 3 back-to-back lower highs. Now, a crazy thing that they're doing also is they're holding up on making a new low. All this is just a correction. They're just trying to confuse people. It's grabbing liquidity on both sides. It's literally a price trap setup, right? So there's another way of looking at it. So just add that to the chart to train you guys' eyes. It's just another way of looking at it, right? Whichever way it breaks the zone, you catch the retest down. So let's say it broke this way and it came up, boom, you caught that sell down. You might even caught that one too for a second. But divergence is what would have gave you the confidence on this sell from this zone. Because remember, like I showed you guys earlier, if they come into the zone and they don't break out of it, it becomes a setup to the other direction, at least down to the zone, but it can also break out of it, which is awesome. So where's the divergence? It's actually all over. These two pullbacks take out everything from the left-hand side. So matter of fact, I'll just use a horizontal tool and I'll just pop it there. And it takes out everything. Like this is where the high starts. The high starts here. This is the high of the year. This is the high of the year for gold on this 4-hour time frame. We're both sitting two highs above the 70, right? We're outside of that yellow zone, and it's above it. It's above this high. So, let me use this tool so people's eyes can follow. It's above this high, it's above this high, it's above this high, and it's even above the highest point high. So this is some good divergence here. And the fact that it did that and didn't create higher highs is a good chance for it to create a lower low, which it does. Creates a lower low. And then the trend continues down. And definitely caught some of these sales too. So that's all. It's just a confirmation. The trend analysis speaks for itself. But this, if I saw this, I pop open my my indicator and I see this. Oh man, it's over. It's over. So like I caught, this is one of the sells that I caught on it. TP was too close. But what I noticed is that when they came here, they made a lower low than this one. So now we got lower low, lower high, lower low. And when they pulled back, this became a lower high. And yeah, took this to break the low some more. Really easy, easy setup. Last thing I'll use for an example for those that are still on. Let's see how many people are still on. Who's some? Okay, we got 50. So you get about majority, like 75% still on. Bitcoin. Let's take a look at Bitcoin, because Bitcoin is everything that we've talked about as well. So of course, let's, like all charts, we'll start from the monthly, because you got to start from the monthly. I hope somebody wrote that down. Start from the monthly. This is so important. So monthly, what is Bitcoin doing? Basically, it's doing nothing. But as of recently, it's been bearish, and it's finally getting into an area where we can consider that there may be some reaction potentially. So we have this candle here on the monthly. Once they get in there, I'll consider looking for some long-term buys. But until then, we're still selling. So for all the months, 1, 2, 3, 4, 5, 6, like for 6 months, it's been bearish. Even before that, technically, you could say it's still bearish from this last move. Overall, it's of course bullish. We know Bitcoin to 1 million, yada yada. But it's been bearish lately. So let's go down to the weekly. What do we see on the weekly? On the weekly, the last significant candle was a large bearish engulfing that broke the low. And then since then, they failed to engulf that candle. So we're making lower low, lower high, lower low, lower high, lower low, and we pull up and we're not making any type of significant bullish candle as of yet. Pretty soon, this will probably be considered a area, and you can consider this a break, a retest. And when it drops to, well, it already hit, broke another low, but it's probably going to do it again to get to this area where it's probably really drawn to. So yeah, it's a below structure. We're still looking at sales. So now we have to hop on the daily. So what's happening on the daily? This trend analysis, looking at the lows, looking at the highs. We made a lower low. We made a lower high. We made a lower low. We once again came up. I remember the moment that this happened. Everybody was in buys. They were super happy. And I saw it hit this area and reject. And I said, this thing about to drop, because it rejected before it made a new high. It didn't do anything. Right? It didn't do anything. It came up and it was looking like it was doing something, but it didn't get anywhere. If you look to the left, higher, high, higher, 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 it didn't do anything. It didn't take out anything. It only took out the high that it just made itself. But since it made that low, all the significant highs, it didn't break it. So when they started to reject from here, I instantly just took it. I just took it from up top. I didn't even use nothing for this one. I just used common sense. But after that, there were setups after this that made sense. So what happens? The market comes down. This was the lowest point, but it takes out every low before that. So as they come down, they hit this point. They take out all the other lows except for this one at that point. And then what we have to look at, so let's look at everything. So trend analysis. We already know overall we're looking bearish. Short-term trend analysis for the 4-hour. We failed to make a higher high. Another thing, on the daily, and as you guys can see it reacting now, this candle, this last blue bearish candle here, failed to get retested. When they went up big in one day on Bitcoin, they just kept going up. They never tested this area. They finally came here. This became my target. So as long as I considered it bearish, I consider this point here as my target for Bitcoin for every sale, just in case I put like a lot size or took an extra trade on it with a take profit here. So even if I was entering here with a take profit there, I had another order with a take profit here because I knew that at some point it would spike to this area. Looks like I probably should have took a buy from this area, but as well. But coming down, they make a correction. So there's a few ways you can look at this. Like it's a harmonic, it's a correction because I think Bitcoin, I think this was called on the harmonic scanner too. One of these trades. This is a harmonic. Yeah, 70, 77. So you got harmonic there, right? That's giving me direction. They're letting me know it's bearish. We know that, you know, we got a nice little impulse of 1, 2, 3 correction. Once they give us that, this is a correction. This is the market not really trying to get anywhere. We need another impulse. And once we get that impulse, well, not once we get that impulse, once we start to get that impulse. So this 4-hour candle here, it engulfed the previous yellow candle. I'll zoom in a little bit. It's so beautiful. I literally just closed all my positions when it hit this blue area. So yeah, they engulfed this previous yellow candle. So now, once they engulf in the direction where you're already considering the trend to be, so we already had like this was a potential candle area right here, right? That bullish yellow candle. So they hit that, but then they engulfed. Simply, once they engulfed, I consider this next yellow candle an area of interest. I just put a pending right there, exactly where that candle engulfed. Because at this point, this is where a good trend line comes in handy. Okay, Bitcoin, calm down. Guys, it's about to be a buy setup after this. If this is really going to do what it's trying to do, like seriously, it should hit somewhere in here, but it needs to pull back. If it goes without pulling back, that's going to be wild. So, oh, damn, it hit it pretty quickly. It needs to pull back. If it goes too wild, that's going to be wild. And I'm kind of scared what it can do if it will really just break out of all of this without pulling back. Kind of will analyze this setup just like this. So it kind of got to that trend line. It's going to break down what's going on right here real quick. So yeah, this area still, even though they hit it once, it's still an area of rejection. It just is. I don't know what time is it. 15 minutes says candle closes. If this candle closes as a decent engulfing candle, I mean, it's probably going to do a lot of playing. So I could see it closing. I could see it pushing up. I could see it coming back down. And then what I will hope is that it did something like that. But outside of that, let's move back to what I was talking about. They engulfed. But trend line. This is actually where a good trend line came in handy as well. And this is something I didn't get to touch on today. But trend line breaks and retests. That is actually a good confirmation. This is a support and resistance type of confirmation. It's what we call vertical support and resistance because it's going, trend lines go up and down. So basically the market had actually pushed outside of the trend line. And even though they also hit this candle, in a sense, you can also say that they retested the trend line as well. So they retested the trend line, retested the candle, boom. And that was confirmation. Already had the direction, already got the candle confirmation. So we're looking down. After that, everything else is just structural breakdown. So let's remove this. This area here is structure. Market broke below it, printed a bunch of candles below it. They spiked into it, they rejected. Same process. And technically, this is still rejecting from this zone, but also from this zone as well. Same process. And then the trade from today is the same process again, where they're still making lower. Do it like this. They're still making lower lows and lower highs consistently. So all I'm doing is anticipating the engulfing. Any retests, I can continue to take that down. Any engulfing below structures, I'm anticipating to take it down below the next low. As soon as it breaks the next low, you just move stop loss to break even and let the market bless you. But another thing about this trade is that really wanted this low right here to be taken out. They have been waiting forever to take out this low. I just knew that they had to take out that low. And also, of course, like I said, every strategy needs to have an entry and an exit. What if you thought that Bitcoin was going to come all the way down here? All right. I technically I wouldn't have made a lot of money today because I would have just lost it all if I thought otherwise. If I thought anything other than that Bitcoin could come to this point, I wouldn't have made as much money as I did today. But because I actually have a strategy that has the correct entry points, the correct exit points, I was able to know that this is actually a place. This is the first place that comes up that is a significant area to make sure that I have a take profit. But I could have maybe a smaller order farther, but your first significant area where the market could potentially reverse on you, you need to put your take profit there. Just automatically set it there. It's not worth it. It's not worth trying to catch 100 pips when the first area is 25 pips away. Like, go ahead and set it for that 25 pips, or set an alert or something, because you want to secure more profits. You want to secure as many profits as you possibly can. Your account needs it. Just being up a certain amount is not profit. You could be up 750, but if you only profit 150 at the end of that trade, that 750 didn't matter. So, yeah, Bitcoin, I'm happy that it moved from this area because it just shows credence to take these candles are serious. If you want to learn how to spot this at a high level, Rock Kermer and Zach and Jordan. You want to learn how to understand the trend analysis to know why this would be bearish, how to catch each of these bearish moves, right? Learn how to work those trend lines. Leon Davies. Also with structure, Abel, Christopher Derrick. Definitely plug in, guys. We ran a little bit long. I'm going to have to do another webinar. I'm going to do a separate webinar for harmonic scanner training. So I know a lot of people have been asking me about how I use the harmonic scanner. So we're going to go ahead and schedule that for next week, and we'll keep that up. But everybody, thank you. I love you guys for getting this value, because I'm trying to work with anybody that wants the best for themselves 2020. That's all it's about, guys. So everybody have a great night. Happy New Year's as well. Start your year off right. I appreciate you all. Definitely show me some love on IG. I'll take all of that. Appreciate it. Y'all have a good night.